Now let's take a look at an investment property that costs $300,000. Okay, so let's do an analysis of another property, a more expensive one. Let's say something that costs $300,000. So let's go through the numbers on this. So you put down a down payment of 20%, so you got $60,000 down payment, loan amount $240, 5.5% interest rate, 30-year term. So the mortgage payment is $1,363. Millage rate is 60, so your monthly taxes are $750. This is a house, so you're gonna have a $50 a month association fee, take care of common grounds, what have you. Liability insurance is gonna be around $200 a month. We have no mortgage insurance, so we're gonna put 0 because you're putting 20% down. Okay, what else we have? We have annual rental license of $125 and monthly rental reserve for maintenance. So we're gonna put $12 there. Okay, so your total pity payment is $2,500 a month. So this house, to purchase with all your taxes, association fees, insurance, liability insurance, it's going to cost you $2,500 per month. All right, let's look at your closing costs. It's going to be around 4% closing costs, so $9,600 to buy the house with your points and closing fees and all that stuff. So you got to bring $69,000 cash to close. Market rate rental. Let's say that's at $3,000 a month, and the higher price. These are tough ones too because you got to get someone that's going to pay $3,000 a month to live here. So let's see what the return is. So your total rental expenses, you have $500 a month in income. You have annual depreciation. So when you buy a house, a rental property, you get to depreciate it over 27.5 years. What that means is that you take the property price of $300,000 divided by 27.5, and that equates to $10,909. That's a additional write-off you get to take on your income tax return in addition to everything else. So at a 15% effective tax rate, that's annual tax savings of $1,636 a year. So your rate of return on that is 10.9%, which is great. So if you can get $3,000 a month, you're at almost 11% net rate of return. But now you have to put some money into the house. Let's say you got to paint, flooring, $10,000, electrical is $2,000, lighting's $2,000 to make it look nice, new appliances, and other contingency. So this house, you might have to put $94,000 into it to get it really in chip shape. Especially if it needs to be remodeled, some updating. So your net return here brings it down to 4.65%. Okay, so let's take a look at this. These are just some average costs you have to take in consideration for a home, whether it's a rental or yourself. HVAC, that's heating and cooling, your air conditioner and furnace. That could be an average cost of $7,000. Roofing, $6 a square foot. So on a 2,300 square foot house, that is $13,800. Flooring around $7 a square foot, so $16,000. Kitchen rehab could be $15,000. Bathroom rehab, average bathroom rehab's around $6,000, so it could be $12,000 right there. Painting's $4 a square foot, $9,200 if you have to hire somebody. Electrical, plumbing. So in this scenario, you could easily spend $76,000 to renovate a home. So let's take a look at these numbers again. So the question is 4.65% a good net return? Because if you're just off a little bit, $2,800 or $2,900, you're at 3.92. Let's say you're at $2,500. Okay, so 1% net return of 1%, 2.356. So this is important. The most important thing is your market rate rental. What can your property rent on a long-term lease? Then you have to add in all your renovations that are needed to get your net rate of return, because it might not be worth it if you're getting a net rate of return of 2.356%. Okay, here's something that's really huge. It happened to me. It's called depreciation recapture. Okay, what that means is that you get to depreciate. When you buy rental property, you get to write off, in this case, $10,900 per year off your tax return to get this tax savings of $16.36 or $1,636. So what the government says, if you sell this house and you don't roll it over into a new investment property, you have to pay a 25% recapture on all your depreciation. So I'm going to explain that to you. So let's say you own this house for 10 years. At the end of 10 years, this happened to me. I didn't want to do rental properties anymore because it was a headache. I thought I'd take my money and put it in the stock market, which I did, and I lost money there. So it was a total disaster. So the annual depreciation in this case is $10,909. Total depreciation is $109,000. $10,909 times 10 years. So you're going to multiply this 109,091 by 25%. So in this scenario, if you own this house for 10 years and you sell it, okay, you're going to have to pay to the government $27,000 in depreciation. That's above and beyond any capital gains taxes. Let's say you sold this house for $350, right, and you made $50,000 profit on it, or you're also going to have to pay $50,000 on that profit. So that's one of the downsides of rental property. If it goes bad, you don't like it, if you want to get out of the business and you've had a property for a long period of time, you're going to get hit with huge taxes. This happened to me. It was horrible. Okay, so that's one of the downsides. So that's why another thing, you have to look at this rate of return. So that's not worth it. I mean, to get 1% net, okay, on this property, then, you know, after 10 years, I'm going to have to pay like $30,000 in taxes. Okay, so that's a problem. Unless you can rent this property out for $3,000 a month, that's not even worth it. Net return, if you got to put $94,000 into it, you know, that's between your down payment and all your renovation needed. Okay, because you need $94,000 to buy this house. Okay, so that's not a good return either. You would have to rent this out for 35, even 35, a lot of money. So that's a problem with rental properties right now. You can't command the market rate rental because these housing prices have increased so much across the whole country from the recession of 2008 that you can't charge enough in rent to really make it look attractive. Okay, that's why professional real estate investors, you know, Donald Trump, he's made billions of dollars, you know, they buy buildings. That's really where you really make your big money, if you're into office buildings and apartments and, you know, this type of thing. But for an average person, owning one or two properties can be really more trouble than what it's worth. Okay, so that's our something I just want to talk about, an investment property, some additional information. Okay, keep watching. Talk to you soon. Bye.